US stock markets were on the rise in the past week, with all three main US equities indexes being in the greens, while since Monday seems to be sending some mixed signals. For the time being, the market's focus seems to be placed on the Fed's interest rate decision later today. The central bank is expected to hike rates by 75 basis points. Also, the bank, due to the high inflationary pressure in US economy and the rather tight labor market, is expected to issue a hawkish forward guidance in its accompanying statement. Finally, the third possible market-moving element of the event could be Fed Chairman Jerome Powell's press conference half an hour later, and the Fed chairman may sound confident and hawkish about the Fed's future rate hikes. Should the bank in general meet the market's hawkish expectation or even surpass them, we may see the US stock markets weakening as a tightening of the Fed's monetary policy at a fast pace could drain the market from liquidity, allowing for less opportunities for investment and profitability, particularly bringing the scenario of a recession in the US economy nearer. On the flip side, any hesitation and cautiousness could provide some support for the US stock markets. Also, we have to note that US stock markets were busy as the earnings season is still on. On Thursdays, after trading hours, Snap released its earnings report, which tended to shake the markets as its earnings report was quite adverse, creating worries for the online advertising sector. Furthermore, on Tuesday, we had the release of Alphabet's and Microsoft's earnings reports. Microsoft missed its target both at an EPS and a revenue level. The share's price found some support as the company's income forecast for the year ahead was quite optimistic, which tended to sway traders in its favor. Moreover, Alphabet's earnings report also missed on the market expectation on an EPS and a revenue level, with the YouTube section of the company may being the most worrying, with a considerable slowdown of the expansion of revenue. Today, we note the release of Meta Platforms' earnings report in the after trading hours. The expectations are for the EPS figure to be at 2.56 and the revenue to reach $28.94 billion, and it's questionable if the company is to reach it. It should be noted that Facebook's share price has been dropping for the past few days, with Snap's release having spooked traders as it worried traders about the online advertising as mentioned before, while there are also rumors for the possible layoffs by the tech giant. On the other hand, the company is reported to consider another acquisition that would boost its future in the augmented reality and the metaverse. Also interesting to see will be how deep the investment into the metaverse has proceeded, which could have an adverse effect on Meta's shares price. Should traders start to be disappointed about the progress of the company's strategic shift? In the coming days, we would highlight the release of earnings reports for tech giants Apple and Amazon, as well as Pfizer and Merck & Co. from the pharmacy sector, all being on Thursday, while on Friday we get ExxonMobil's, Chevron's and Procter & Gamble's earnings report. As for financial releases, we would highlight tomorrow the release of the US GDP advance rate for Q2 as a major risk event.